signal was that the Chinese stock market didn't respond well to that Chinese currency devaluation, and therefore nobody was responding well. There's all sorts of spillover, and this impacts a lot of different markets and economies.
Yeah, no, it does. But there's some feeling that maybe they had their beneficial reaction yesterday, that when they had that 5% move in the Chinese markets in anticipation of some stimulus, and this kind of fit right in. But as you and I were discussing off camera, there are real possibilities here about the other Asian tigers, the emerging markets, Malaysia, even Singapore, Indonesia. Their currencies were all in rather rocky shape before this started. Then are we going to go into a full-scale currency war? That's going to be.
Well, a lot of people think we have been in one, and this is just the latest sort of move, and everyone's going to have to retaliate. I guess the question is, what does that mean for stocks, and how spooky is that if we are in this world where we're seeing all sorts of competitive devaluations just ramp back up?
Well, the problem is, as we learned in 2008, global trading means the world's all linked together. And while we can be dismissive and say, well, you know, what would Indonesia mean to us, or what would Malaysia mean to us? We said that about the Thai baht in '97. So these things can spill over. I think the Fed's going to probably watch very closely over the next 4 weeks to see what kind of spill out we get here. Does it begin to interfere? Now, on the face of it, you would assume that China might want to sell U.S. Treasuries to help push rates up here, which would strengthen the dollar. But conversely, they have the other problem, which is they need to make sure their currency stays low. So either they move our currency or they've got to protect theirs. And to protect theirs, they may have to buy U.S. Treasuries, which is the reason that they have amassed the hoard that they have already.
So you're resolute on your forecast that the Fed does not move in September or in December?
I'm still there. Yeah, I think they have an uphill fight, and I read Fisher yesterday as saying, look, we are where we want to be on unemployment, but we can't quite get there on inflation. And I think that he was purposely spelling that out because all the pundits in the world were going crazy trying to say, well, is it 5.3, 5.2, 5. And he said it doesn't really matter. That's not what we're looking at now.
And Lockhart being disposed to September, not a deal breaker. NFIB today, compensation, that's not enough to move the needle.
It doesn't look like it to me, no.
What about disinflation as a result of what China's doing here? And therefore, where do we go on rates? Is it possible we start heading below 2, or do we head down towards 2?
I think we can. There's also the great risk. I mean, they say we've got to get off zero because we can't do anything. Obviously, what they can do is go back with another QE. And so I think you're going to want to watch exactly what's going on. Fisher referred to oil, and he talked about the commodity pressure as being transitory, their favorite word. But if you look and see what's going on in things like copper today, this is really a deflationary push. I think you picked an apt topic for where things can get a little bit out of control.
Another QE? Did I hear you say that?
Yeah. If things don't start to go right, do they have any other choices?
At some point, you're pulling on a string, aren't you?
Well, you have, but I mean, they're in a kind of silly loop where they did QE expecting a reaction and didn't get any, and then they had to go and do QE again because it didn't live up to their forecast. So, yeah, but they have no other options. If things began to go negative on the economy, QE is all they can do with zero.
Art, energy is the hardest hit sector right now. You mentioned copper was weak. Industrials are also at the bottom of the pack. This is the opposite of what we saw yesterday. And so for all of those folks that were out yesterday saying commodities bottom, Barron's put it on the cover, you don't think we're there?
It doesn't feel like it yet, and this is going to play out, I think, over 2 months. So it's not that easy. I know a lot of people felt that commodities at bottom, but I'm not so sure. I think they really kind of panicked when they saw their exports go down 8%. And for all the talk about we're going to convert our economy and we're going to have a consumer economy, it's not happening. They're having internal struggles there. And Abe in Japan is beginning to lose public support left and right. So
time to weaken the yen more.
It may be.
More can they weaken?
They can go further.
Right.
Right?
That's what we're going to be watching. Currency wars are about to heat up.
I'm going to be watching the political response from the U.S. Donald Trump won't respond to me on Twitter. But seriously, China's been a punching bag administration.
And they're coming here in a month.
And they're coming in a month. And this is going to be on the agenda, I guarantee it. I mean, this is considered a step back from the appreciation, right, that they've been doing over the past few years.
No question.
Although it has appreciated 30% or so
Correct.
against the dollar over the last 10 years, right?
Right. But this move is a sort of record move that's going to get a lot of attention. Anyway, Art Cashin, always good to talk to you, especially on days of devaluation.